Major bellwether, Texas Instruments reporting earnings after the close. Time is 1:55 p.m. Pacific Standard Time, 1/24/2011. Stock closed at $34.65. It's had a great run up into the earnings, $19 million. Once again, over the years, it's always been a major bellwether. And we're going to take a look at the earnings report. And the earnings of 78 cents per share, including a 14 penny net in tax benefit gains from asset sales. How about that? So that puts them beating the earnings at 15 cents. Okay. Reuters consensus was for 63. Revenues rose 17.3% year to year to 3.52 billion versus 3.5 billion. Here's the trick. Q4 operating margins, now that including the gains, 34.9% versus 31.1% consensus. Orders were 3.13 billion, down 4% from a year ago and down 9% Q over Q. Inventory was 1.52 billion at the end of the quarter, up 318 million from a year ago and up 96 million from the prior quarter. Capital expenditures were 301 million in the quarter compared with 436 million a year ago and 369 million in the prior quarter. The company is issuing inline guidance for Q1. They say EPS, earnings per share, of 54 to 62 pennies per share versus the 57 pennies of Thomson Reuters. Sees Q1 revs 3.27 to 3.55 versus the 3.2 billion consensus. So the company sees FY11 capex of 0.9 billion. So revs of 3.27 to 355 versus 3.32. So the lower end is 3.7, the high end is 3.55. It's inline guidance for Q1. There's nothing to be real happy about other than it's doing okay, and it's showing some economy that semiconductors, capital semiconductors, and various different semiconductors that are out there are seasonality. So basically, we're going to see throughout 2011 how Texas Instruments performs